Yeah, so hey, I was doing some research the other day and I was looking at TLT, which is the US Treasury 20-year ETF, and JNK, which is the Junk Bond Index ETF. Just wanted to explore how they're doing performance-wise this year. It was pretty striking. Both of them are down, no surprise, but TLT is significantly underperforming, and I just thought that was pretty striking, considering that investors typically think of US Treasuries as not that volatile or fairly risk-free, but they're down over 20% year to date, so tracking equal to the decline in the stock market. S&P 500 is down over 20%, just over 20. So really interesting, pretty striking. And the junk bond index, so these are low quality bonds, low quality companies and their debt, is outperforming it. It's only down 13%. So I'll pull up the graph here in a second, but I just thought it highlighted a couple things. It's kind of a classic illustration of economics and what happens when interest rates rise, but also it signals something, there's a lot of noise out there in the economy, and I don't think we quite got out of the growth scare that happened during the pandemic. This chart actually, to me, represented that, because if the economic situation or foundation was shifting dramatically to the downside, JNK should be underperforming TLT. So here's that chart of TLT, JNK. Like I said, pretty remarkable. TLT down 20% year to date, JNK down 13. You can see around April, when interest rates really started to explode upward, that gap really widens out. It's very possible. Could see some form of a recession if we're not already in one, but I don't buy into this idea of some massive collapse. This fact of TLT underperforming junk bonds by this margin says that there's lots of different weird things happening out there in the economic system. And all this money spending, all this stimulus, it's going to work its way through the system in all kind of wild ways. So, all right, take care.